Hi, sisters and friends and bookkeeping mamas. Welcome to Bookkeeping Mama, Bookkeeping Advocate. I am a bookkeeping mama and I am trying to be your bookkeeping advocate. Just want to take you on a journey to let you know the benefits of bookkeeping in both your personal life and your professional life. So as you can tell, from the release of this video, it's Thursday. I aim to release traditional bookkeeping videos on Thursday and lifestyle bookkeeping videos on Tuesday. So if you guys have any suggestions for videos you'd like to see, please let me know in the comments. And while you're down there, please subscribe to the channel, like the video, and hit the notification bell so that you are alerted whenever I upload a video. So today I wanted to talk to you about the three main functions of a bookkeeper. There are many things that a bookkeeper can do. A bookkeeper can do payroll. A bookkeeper can give advice. A bookkeeper can present you with, when they present the financial package, they can present it in a variety of ways. They can do video. They can do a consultation call. They can do all types of things, but the three main functions of a bookkeeper is to categorize transactions, reconcile accounts, and produce timely and accurate financial reports. That's the basic bare bones bookkeeping. Categorizing transactions, as you guys know, especially there's another video, I got to rearrange them, but there's another video about the chart of accounts, which will help you to understand what I'm about to say a little bit more. But categorizing transactions is just about taking all of your transactions and putting them into little buckets that help you to stay organized. So like transactions with like transactions. If I buy my company shirts from this company or this vendor, and then I buy my company shirts from this vendor the next year, they're still company shirts. They're going to be categorized the same way. If I buy staples from this company and then I buy staples from that company, they're still office supplies. If I buy staples from this company but I buy my office paper from this company, they're still office supplies. So basically categorizing your transactions, depending on the size of a business, it may be done on a daily basis, a weekly basis. Never should be done on a monthly basis. That's just cutting it too close. But if you're going to categorize the transactions, you want to make sure that you have a system where there's like-minded buckets. So for example, in bookkeeping, we use a chart of accounts. A chart of accounts is just a nice little way to put your transactions into buckets. And the chart of accounts can look a variety of ways, but there is a typical way that it looks. And I'm not going to go into detail here. You can just go ahead and click that chart of accounts video and take a look at that. It's a really short video. And this video hopefully will be short as well. The second thing that bookkeepers do are reconcile accounts. If you're old enough, you'll just consider this balancing a checkbook. So of course you have your transactions, and ideally with your bookkeeping, you are keeping your own detailed list of transactions. Well, your bank and your credit card companies are keeping their own detailed list of transactions at the end of the month or sometime in the middle of the month. But sometime you need to make sure that those different records match each other. They tie out with one another. They're reconciled with one another. I have another video on bank reconciliations as well, so you guys can take a look for that video. Lord willing, I'll have them both in the description of this video. But reconciliation is basically just making sure that everything matches out. And one of the things that I like to point out when we look into reconciliations, and I won't go into the 6-step process that I describe in the reconciliation video, but you want to make sure that there are, you want to look out for timing differences, you want to look out for omissions, and you also want to look out for errors. So timing differences mean that something happened and I put it in my books, but it just may not have happened at the bank just yet. For example, I wrote that I received some checks, put it in my books, mailed the checks, and they haven't been sent to the bank just yet. So if I'm trying to do a reconciliation at a time where I have the information in my books, but it hasn't happened at the bank, then that may just be a timing issue. Another may be omissions, and that usually happens where I don't have some information in my books that were actually some transactions that happened at the bank. So for example, there may be some interest that they gave me at the bank. There may be a a bounced check at the bank. There may be bank fees that I didn't calculate into my books. And so those are just omissions. And then there also may be errors. Now, again, errors generally happen in my books just because of human error, especially now that banks do a lot of electronic banking. But errors are just things that may have happened. So, for example, I received a check for $757, and I wrote it in my book as $775. Just transpose those numbers. Then there's going to be some kind of error, and there's going to be mismatching in the books. So that's just what reconciliation is. Balancing your checkbooks. And then finally, the third main function of a bookkeeper is to produce timely and accurate financial statements or reports. Now, this is very important because those financial reports represent how accurately we've been handling the other parts of the business, which is categorizing the transactions and reconciling the accounts. But it also is going to give us information on where our business stands, or if you're doing bookkeeping for someone else, where their business stands. It lets you know the different changes that may need to be made, or it can let you know if you're on the right path. It can let you know if something's off, if there's a problem. Those statements are very important. And the reason they need to be timely is because they need to give you enough of an opportunity to make any solid business decisions based upon the actual financial reports. And the reason they need to be accurate is for the same reason. They need to give you the opportunity to make financial decisions. Now, again, timely. What does that look like? Generally, before the 15th or the 20th of the month should help to give you the information at a timely, at a time where it can actually benefit you to make changes for the next month, preferably sooner. Also, accuracy. Now, I think it's important to understand for you if you're trying to be a bookkeeper, or if you are looking for a bookkeeper, or if you are bookkeeping for yourself. There are going to be mistakes. There are always going to be mistakes because nobody's perfect, but you do want to strive for accurate books. These books will help you to run your business. They're going to help you to show any stakeholders, i.e. like family members, anyone who wants to invest in your business, any creditors, and they're also going to help you to be prepared for tax time. You do not want tax time woes in bookkeeping. Solid bookkeeping is the perfect way to handle avoiding any tax time woes. So those are the three main functions of a bookkeeper: categorizing transactions, reconciling accounts, and then finally producing timely, accurate financial reports. If you guys have any more questions about the functions of a bookkeeper or any other components of bookkeeping that you'd like to see me do a video on, please let me know in the comments. And again, while you're down there, please like the video, subscribe to the channel, and hit the notification bell so that you are alerted whenever I upload a video. Other than that, hope you guys have a great day. Remember, we are on a mission to help our families to avoid generational paycheck to paycheck living, or worse, generational poverty, by helping us to protect our families, nix our mortgages, defeat our debt, tame our taxes, make more, and live free, all while still glorifying Christ. You guys have a great day. Keep your money safe, but of course, keep your soul safe. Bye now.